Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation.
And then the other thing that was extremely unclear was if someone inherited an IRA from someone who passed away after 2020, did they have to take an RMD between year 1 through year 10, or could they take the whole thing out in year 10? Well, starting this year, we now have clarification on that. They gave us a little bit of grace from 2021 to 2024. But starting in 2025, if the person who passed away was already taking out their RMD, the beneficiary now has to take out an RMD amount that year as well, a minimum amount. Now, theoretically, that amount is much less than, say, for example, a 10th of the account if you were trying to just nominally equally disperse that account over 10 years. But the reality of it is that we have some of our clients that don't want the money. And because of it, they defer not to taking it. Well, this is a change that goes into effect in 25, that if mom or dad or whoever it was that had the IRA that you inherited was already taking required minimum distributions themselves, we need to take at least that amount. Now, Mike, correct me if I'm wrong, but if you were not, if mom and dad or whoever it was, the patron of the IRA was not taking RMDs, my understanding is that they do not have to take an RMD. They still get the full 10 years. Is that correct?
That is correct. Yes. So basically, that's the way the rule is as it's finally been clarified. Like you said, there's a lot of back and forth on that. So if the decedent or the person that had the original IRA was taking RMDs, just like you said, you have to continue that. If you don't, starting in 2025, the IRS will assess a 25% penalty on the amount that was supposed to be taken out. So obviously something you want to avoid as far as making sure to satisfy the RMD requirements. But yeah, there was a lot of back and forth on that. So we finally gotten some clarity at this point, and it's something that we're going to have to continue to assess.
The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.